Hey, Sats fans, welcome back to Swan Signal Live. This is episode 85. I think this is maybe the sixth or seventh quarterly report that we've done with Preston Pysh and Andy Edstrom. These are my personal favorite Swan Signal Lives. We're doing this in prime time. There's always some good energy going. And these guys, know their stuff and have developed a rapport, the three of us. And I think it's just a fun night. So we're in store for that. I want to tell you about a couple of things, two awesome things. First is the Pacific Bitcoin Conference. This is November 10th and 11th in Los Angeles, California. We're taking over an old airport hangar, and we're going to just make it absolutely incredible. Big main stage, incredible guests. We'll have the Swan Dome if you were around in 2020 at the Bitcoin 2020 conference. We had a big Swan Dome, and it was just a big hit, fun vibe, really special. So we're going to try to recreate that vibe from the conference a couple years ago. Will be kind of more deep dive sessions and a lot of fun stuff for the Bitcoiners who want to get down to the nitty gritty. We're going to have a Q&A tent. So you find a talk really inspiring on the main stage, you'll probably be able to get to one of those speakers or one of the people on the panel to ask questions for another 30 minutes or an hour at the Q&A tent afterwards. This is kind of a novel thing at a Bitcoin conference. Haven't seen it yet. I'm really excited about it because I think it'll be a great way for everyone to interact with their favorite Bitcoiners. It's going to be a lot of fun in general, basketball going on, all kinds of just fun activations and music and all that, parties throughout the whole week. So it's going to be a lot of fun. Pacific Bitcoin Conference. Go to pacificbitcoin.la right now to get on the wait list, pacificbitcoin.la. You'll get the first notification and access to the cheapest available tickets for the conference. And one other thing I'd like to just present here, let's take a look at a promo for our new show, Hard Money. We've run 4 episodes now. Just a couple of hours ago, this week's episode premiered on the YouTube channel, Busy Night for the Swan YouTube channel. Just a quick peek at what we're doing with Hard Money.
Hello and welcome to Hard Money. I'm Natalie Brunel. Bitcoin remains in the high Hope House here in El Zante. It is a community center that does outreach at Bitcoin Beach. Look, they even got their own Bitcoin mobile.
I want to start a Bitcoin caucus with other elected officials across the political spectrum.
It turns everything brighter. Magic money, baby.
Goldman Sachs has offered its first Bitcoin-backed loan for cash.
Everybody knows the word Bitcoin.
The Bitcoin. Oh, Bitcoin.
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 Sí. Economic freedom with Bitcoin.
On Hard Money, we'll bring you the top headlines of the week with analysis you won't find anywhere else. I'm Natalie Brunel. Welcome to Hard Money.
All right, fellas, have you checked out Hard Money yet?
I was on one of the episodes.
You were on the very first episode.
Yes, I have.
That was a little bit of a trick question, or a leading question at least. Yeah, absolutely. Andy, what do you? I mean, you've been on the show a couple times too, I think.
One or two times, I think, every episode. It's a great time. Natalie is an incredible professional, and honestly, I'm lucky to be there.
Yeah, it's a great time. I'm really proud of what's going on in Swan Studios. So, props to those guys. Well, welcome back. It's another very eventful quarter in the world of macroeconomics and socio-political. Maybe there's a contagion there going on as well. The crypto world and Bitcoin industry. Let's just dive into a quote from Jerome Powell recently, and it just gave me an absolute chuckle. And I just want to know what you guys think about this stuff, because it's at the point now where they're either completely incompetent or they're just like slow rolling out what they have known from the very beginning. So here's the quote. "We now understand better how little we understand about inflation." That's it. Quote. So what is this? An admission of incompetence? Maybe the Keynesian economic theory crumbling slowly but surely with a sentence at a time every month from Jerome Powell. What do you guys make of this? Preston, kick it off.
I was just blown away by it. I'm kind of speechless, to be honest with you. There's not too much I can really say other than I agree with them that they are clueless. And that's really it. What else can you say? It's not like we haven't been saying that we were going to see this and that this reality was going to come. So There are people, and it's not like there's only a handful of us. There's a lot of people that were saying that this was going to be the case, and here it is, and now they got a real problem on their hands. Now, I think the thing that maybe they came with so much firepower on this last round. When you look at the central banks collectively after COVID, they added about 10 trillion, units into their fiat units in dollar-denominated terms into their central bank balance sheets collectively for at least the top 4 central banks. And I think that they came with so much firepower because for a decade they were not able to demonstrate or display that they could create inflation. So I think that they were like, all right, well, let's just throw 10 trillion at this thing. Let's really keep the system stimulated, considering people aren't working. And boy, oh boy, did they get it. And they got inflation. And so now they're trying to get it all under control, and they're spazzing out, and they've got to keep supposedly raising interest rates, which I think they're going to try to do, but I think that they're going to cause a liquidity situation, and I think you're starting to see that show up in the bond market. So, yeah, I mean, it's insane.
I mean, we're seeing sort of admissions like this relatively regularly now from top officials who are watching over our economy or our treasury. And it's, if I were watching without a whole lot of context from being a Bitcoiner for 5 years, this would start to get a little concerning. These people are expressing their, incompetence, I guess, clearly in front of us, that, hey, we don't understand what's going on here. This is something that we didn't predict. It's not in our models. How can we deal with it? It seems like they don't know what they're doing, Andy.
The emperor has no clothes, and also pay no attention to the man behind the curtain. Because the man behind the curtain doesn't know what he's doing. And yeah, it's it makes me think of, there's all these drivers of inflation, right? And we can identify them. Why are we getting inflation now as opposed to the last 30 or 40 years or what have you, right? There's demographics, and there's deglobalization and supply chain breakdowns, and there's some technology factors, and there's the whole baby boomer generation leaving the workforce, right? All that labor going away. There's all these various factors, and those are all logical, and those can and should be in our drivers of inflation. And this is before, by the way, we're even talking about the stuff that's gone on with Ukraine, right? That was this additional shock. But in addition to all those actual factual drivers of inflation, you have expectations, and you have human psychology, and you have herd behavior. And these are not predictable dynamics. These are about people's expectations. These are about the notion of common knowledge, and what I think isn't important. It's what I think that everybody else thinks, and what everybody else thinks that I think. And there's a feedback there. There's a mechanism that is nonlinear. You can't predict it. And when there's a change in expectations, and people look around and they say, "Oh, this, I really don't want to hold this fiat money anymore if I don't have to," then you'd get a step change. So, yeah, it's to some degree the hubris of the powers that be, thinking that they can stare at charts and numbers and run their models and think that they can predict this thing. And the reality is they can't.
I feel like Jerome is just a few steps away from reaching the conclusion of the pinned tweet on my profile, which is, I'm still amazed at how I didn't understand money at all until Bitcoin. So you're going to get there. You admit you didn't understand inflation. Next, you admit you don't understand money at all. So hopefully we'll get there. Maybe we can see Jerome complete that arc into a Bitcoin hero. So guys, what happens if, okay, so Preston was getting there on his last answer. What happens if inflation doesn't decrease, given maybe another 50 basis points increase, or maybe even another 75 basis points increase, which nobody's really talking about yet? But what if something like that happens, and come August, we're still seeing inflation far above 5%? What can we expect? Are there going to be some internal structures of the system that will start cracking? And if so, what will be as sort of the canaries in the coal mine? I
think one of the things that folks need to be prepared for is, and in the past, over the last 40 years, when you've seen inflation, it's kind of run hot, kind of homogeneous across the various sectors. And I think right now you're going to start seeing different parts of the commodities and finished pieces and parts, and certain parts of the labor market are going to continue to run very hot and be very burdensome for folks. And most people that listen to these types of shows are well aware that it's the stuff that everybody desires, that you're going to see that. And then I think for the things that are not necessities for life, you're probably going to see you might see a lot of deflation in some of those areas. And so for folks that are looking at this, especially macro academic economists, they're going to have these neat little tools and things that they want to put into a bucket to define things as whether inflation's hot or cold, while you have the regular consumer who's dealing with the things that everybody's demanding, and they're really struggling to make ends meet. And so that's going to be something that I think you're going to see more of in the coming 6 months. And I think that you've got that perspective here in the US, and then I think you have that times 3 over in Europe, where because of just the energy situation that's playing out because of the Ukraine-Russia situation and how reliant the EU is on Russian energy, you're going to have that even amplified much worse, I think, over in Europe than you will here in the US. And so this is going to be a real challenge for your pencil pushing academics that really want to just kind of define things real simply. And I think the everyday person who's out there dealing with this is going to be screaming, like, what in the world are you all doing? What in the world are you doing raising rates? Or here in the US, they're not even raising the rates in Europe. And I don't see these inflation prints going sub 2%, right? Now maybe they will in a immediate deflationary fit, like everything's breaking, liquidity's locking up in the bond market, and so that you might see that because everything's going to hell in a handbasket. But it's going to be a short-lived situation, and then they'll have to step in and recapitalize things. But this is going to be really interesting how this plays out, in my opinion, in the coming 2 quarters.
So, Andy, assuming the Fed continues their sort of published projected increases or accelerates, what breaks? What are the canaries in coal mine for us to watch for?
Yeah, well, obviously you've got the usual suspects in the credit market, right? You got repo, you've got junk bonds and high yield credit in general. You've got the Treasury market itself. We saw that break a couple years ago and change, right, when COVID hit. That was the real scary moment for the Fed, was when the Treasury market started trading down with equities. That's when you know you're in trouble. So those are all possible events, right? Any of those types of areas in the credit market failing to function properly would all be indicative. And so will we get there? It's entirely possible. It's interesting, though, to think about, well, what if an inflation print comes down a little bit lower, and also how much of the rate increases are already priced in, right? I mean, the futures are already telling us that the Fed's going to keep going, not all the way to 4%, but into the 3s. And so I think a lot of that could be priced in. We just don't know. I think the QE is another story. I mean, literally sucking dollars out of the system or reversing the injection of dollars. That's the harder thing, I think, for risk markets to stand fast in the face of. So those are things that I'm thinking about. And then obviously the election. I mean, the election could reduce pressure basically on the Fed, because as important as it is for stocks and risk assets to go up, it is actually, we found out the hard way, more important for inflation to come down. And so as long as they can show some improvement, as long as there's some reduction in the monthly CPI numbers. And as long as we can get past the election, then there could be some relief there.
You know, Andy, when I'm looking at the friction points, you know, you can talk about the yields and all that, but when I'm just looking at the power of the dollar right now, it's just wrecking everything. Like, especially compared to Europe and Japan. I mean, those two alone debasing against the dollar, and the dollar's it's becoming it's like an infinity stone in one of these Marvel movies where it's so powerful you can't touch it. All this dollar denominated debt, as the dollar gets more and more powerful, and like you look over in Japan and there they are trying to defend their yield curve control, and in that process their reserves are just you know being thrown into the wind, and they're just disappearing. And so when you're watching this and I'm looking at how powerful the dollar's getting throughout this process, I just don't know how much more it can go before you literally start to break things outside the US, which then becomes a problem for everybody.
Yeah, that's spot on, Preston. I mean, the dollar denominated liabilities outside the US are there's a lot of parties that are taking pain right now. And I agree with you. It's been interesting to watch the dollar rally, and I wonder aloud, how much of that is just pure Fed policy, right? It's just rate tightening versus how much of it is geopolitical, and it's investors, either foreign or domestic, saying, the world is a scarier place now, right? With the major powers realigning and with a land war in Europe, do I want to have my money in emerging markets at all, or how much do I want to have there at the margin? So some of it just, capital flow, basically fleeing less safe environments, come into the U.S., which is still Fortress America. I mean, as many problems as our political system has and our monetary system has, we're still clearly the cleanest dirty shirt.
Hey, Eddie has a great question here in the comments on the side here. He says, are credit markets more of a priority to the Fed than inflation? And I'm kind of curious what Andy thinks. I would say that as long as things aren't breaking, inflation is the priority. But as soon as things start locking up in credit markets, similar to like what you had in 2008, 2009, they have to keep the system plumbed at all costs. Like things will go into chaos if they don't keep the credit markets plumbed and liquid. So, and I think that's why you have so many people running around and chirping the narrative that they're going to keep raising rates until they break something. And I think that's kind of wise, because the inflation prints are so lagging in reality, right? Yeah. So I posted something the other day where I looked at all the commodities, major commodity indexes for the month of June. And I mean, literally everything, I think, except for lumber was down in the negative territory. Some of them double digits down just in 30 days. And so when you're looking at, and this is another thing that's important, that when you get in these currency failure type situations, which take years to play out, you might see the prices of the commodities going through a deflationary period, call it a quarter or whatever, right? Like, so we're starting to see deflation at the commodity level as of last June or last month. But that doesn't mean that you're necessarily going to see deflation in the finished products that you're buying, because there's all this other supply chain that they have to go through. The more complex the part, the more it takes for that pricing mechanism to play out to realize some of those deflationary prices. So the fact that you had a little deflation on commodities in the month of June, doesn't mean that you're going to see that on the end items that you're buying, especially for complex parts. So like, think of like a car, right? And that's not even all that complex. It's complex, but there's things that are even more complex that go for billions of dollars in this type of economy. Think military industrial complex and all these other things. And so when you're looking at that and you're looking at, just drive around and look at a lot of any of these car dealerships. They don't have any cars. Right? They don't have any cars. So what do you think's happening to the price of something that there's definitely demand for new cars, okay, but there's no inventory. So what happens to the price? It gets bid to the moon. Like I'm seeing, somebody told me the other day, some new Cadillac was like 6 figures. And I'm like, what? Who the hell is buying that? But because there's no inventory, you have people that are buying that. I'm going off on a little bit of a tangent here, but it's when you start talking about where this is going in the coming 2 quarters, what we used to think of as inflation was kind of a clean idea, and it's about to get really messy and difficult to kind of wrap your head around, because there's so much complexity wrapped into supply chains and how long it takes to percolate out.
Yeah, so just a couple comments. First of all, probably the best investment that I've made in the last 18 or 20 months was the new minivan that I bought for my growing family. It's outperformed Bitcoin. It's outperformed equities. It's outperformed just about everything else. And I was thinking at the time that I didn't want to be spending fiat on wheels. I'd rather be investing it in something else. But surprise, surprise, so far that's been a good trade. And then, yeah, to your original question, Brady, or maybe your comment, Preston, yes, employment and inflation are the Fed's mandates, but also financial stability. And if you don't have financial stability, if you don't have blood flowing through the body, which is the economy, and that's really what credit markets and flows are all about, then you don't have much. So yeah, the Fed must seek to balance inflation and employment while also maintaining financial stability. And if you lose financial stability, then that becomes very, very important. Just like loss of access to the air you breathe, or loss of access to blood pumping in your system, very quickly becomes your top priority.
Good question, Eddie. Appreciate that. I don't know if we picked this one to the bone yet, but let's just find out. We've seen the ECB already start to pivot a bit and start buying bonds at the first signs of trouble in Italy, Spain, and Greece. The Fed pivot is what everyone's talking about these days. We've already been talking about it a little bit here. How much destruction can the Fed stomach before pivoting to turning that money printer back on? Any key data points you guys are watching? We've already kind of mentioned that, but do you think the Fed will pivot at all in this, let's say, next quarter before we have our next quarterly report?
Well, I think it's really I'll jump in there. I think it's really interesting to observe what Preston highlighted before, which is stocks are down obviously a lot. We're in a bear market, and yet it's been an orderly liquidation, so to speak. And now commodities, industrial commodities, are coming off. Not just industrial commodities, but pretty much all commodities. And that is an indicator of reduced demand. And that's actually, frankly, a great outcome for the Fed at the moment with respect to what they're trying to do, right? They don't control supply, right? So all they control is demand. And if they're seeing commodities fall and they're seeing credit markets fall but still maintain order, and they're seeing equities fall, but again, in an orderly fashion, I mean, that's a fantastic outcome for where they are given facts and circumstances. Did they make a policy mistake prior? Yeah, absolutely. I mean, they should have tightened policy last year. That's clear. That was clear even before the Ukraine shock and the Russia shock. But I think actually, considering facts and circumstances and considering where they started, things are going surprisingly well for the Fed and policy right now.
All right, let's shift over to energy for just a few minutes. We've recently seen the price of oil start to fall. Of course, in this past quarter, it shot up to highs not seen in quite a while. It's dipped back under $100 for the first time in months. In general, we've seen commodities fall off a cliff this year. So do you guys think this is a sign of inflation peaking in the short term? What are the consequences here of like the oil prices kind of below $100 and maybe with the possibility of spiking back up again later this year? Preston, I'll kick it over to you.
I think right now there's a lot of people anxious to make that call for vanity. It's always fun to be able to call a top or whatever, or a transition point, but everything that I've seen so far, I would argue you're still within a volatility range that isn't obvious that that's happened yet. Now, if we would circle back in 2 or 3 months from now and look back at this moment, and it was a top, it was in fact a top in commodities, that wouldn't surprise me in the least bit. I'm just, for me, I used a pretty generic tool called an ATR that's just like looking at your average range of your volatility on the charts. And so for different charts, you have higher volatilities, oil being one of those kind of things. And so when I'm looking at the range that I typically like to look for a transition point, I don't think that you've necessarily been able to define it as a transition according to using like an ATR or any other type of momentum tool yet. But is it close? Yeah, it's very close. I would define that range as a close kind of below like $95 a barrel. And right now on UK oil, you're at 104. So, you could get there. There's other things to kind of look at in that gauge, but again, similar to what I was saying earlier, just because you're seeing that in the commodities doesn't mean you're necessarily going to see that at the gas pump or with new cars or houses or whatever. And the whole real estate market's a whole nother animal that we could go down. But it wouldn't surprise me if you're at a transition point where you're going to start to see deep deflation. I'm just not ready to make that call. And when I am ready to make that call, I'm going to be late. Just anytime you're doing momentum with a little bit of confidence, you're not going to call the top. You're not going to call the bottom. So I'm just not there yet.
Yeah, Preston's point is well taken. I mean, if it's like make the monthly call on, peak CPI, good luck. Calling tops and bottoms, within a month is impossible. And so, but yes, if basic commodity prices are a leading indicator, given the supply chain lags that Preston identified, then it looks good for disinflation, right? But how long that'll take to flow through the system, yeah, it's anyone's guess. I mean, it looks good, but we'll see.
I can give you two scenarios where making that call right now I think is dangerous or a good call. So like one scenario, let's say they break something in the next 30 days. Like you see the bond market blows up and or you're seeing impairment somewhere and it's wrecking havoc in the global economy. They have to step in. They have to provide liquidity. They're going to drop a bunch of money into the market because if it's something sizable that breaks, call it a bank. I mean, look at some of the CDS on some of these banks. They're blowing out, right? So like let's just pull on that thread and let's say that in the next 30 days to 60 days that happens, and then they have to step in and provide a bunch of baseline money and recapitalize everything. And so do I think that you're going to see peak inflation and go through a big giant deflationary fit through? Maybe in a very short amount of time you would, but then you're going to see things start taking off again, right? So it's what time frame are you looking at things? Are you looking at things in a 3 to 5 year time frame? Are you looking at things in a 30-day time frame? And that's one of the hard things of doing shows like this is somebody who's listening to this might be looking at things in a quarter time frame in their own mind, and they're saying, "Oh, you were wrong." But so I just want to kind of phrase like as we're looking at this. So if they would step in and they recapitalize, and then all these things, and then you're wrecking havoc in these supply chains even more by stepping in and flooding the markets with more fiat. And so you could see inflation continue to run in that scenario, right? Depending on how much magnitude they step in with, and at what speed they step in with. Now here's another one: nothing breaks, right? And they keep tightening. And they keep doing quantitative tightening here in the U.S. And you see the dollar continue to bid, and you see these markets continue to, in demand, gets completely sucked out like a soul sucker, right? You're gonna see deflation. So this is where people, I think, get out over their ski tips on these types of situations, because you get some people who look at this and think that they know something for sure. And what's dangerous when you think you know something for sure is then you use leverage to to double down on whatever that idea is. And boy, oh boy, what a recipe for disaster. I read something the other day that somebody lost like tens or hundreds of millions of dollars. Some fund lost a ton of money shorting Celsius. Okay. Now think about that. Celsius is down, I don't know, 80, 90% on that token for the year. And this person blew up their fund shorting that. Here's why. Is because the volatility on moves like that are unprecedented in both directions as it's finding whatever reality it's moving towards. And so if you think that the dollar isn't wrecking that kind of havoc on the global stage right now, you don't understand what's happening.
Mm-hmm. All right. Well, leverage, Andy. Let's move over to the crypto contagion, the harms of leverage. So, I mean, I know that you've been talking a lot about this on Twitter and have a lot of thoughts to share. So, in fact, we played that clip from several quarterly reports ago on Twitter, where you said that leverage has a way of humbling even the smartest people. So, let's hear your thoughts on just leverage in general and how it's really led or been a huge part of, or maybe leading cause of this crypto contagion that we've been watching unfold.
Yeah, man, leverage. There's a reason that my Twitter name lately I've adopted. It's toxic leverage minimalist. and that's how I feel. I mean, look, many or most people that speculate or invest in financial markets learn about leverage the hard way. By the way, I'm one of them. I was never, taken out back, so to speak. I mean, it never destroyed me, but there was a time earlier in my career when I speculated on currencies with lots of leverage, and I got stopped out and wrecked. Fortunately, I had limited the damage. I hadn't put on so much exposure that it was going to ruin me. Nevertheless, some painful lessons, some wounds suffered. And so I think it's partly because of personal experience that I warn people against it. And it's everything from the individual level, right? What's the one thing that can turn Bitcoin into a shitcoin? Well, it's leverage.
Yeah.
It's the thing that inverts the whole game. Bitcoin is this phenomenal, collateral that no one can take from you, unless and until you post it and go levered long, and then you can get the rug pulled at the worst possible time. Now, as far as the system is concerned, I mean, we knew. Look, I've been surprised. I guess I've been surprised at the scale of the problematic leverage that was in the system. I mean, we all knew that these lending platforms were taking in coins and they were taking risk out the back end. Obviously you couldn't see into the frauds. You couldn't see into the giant balance sheet holes that we're now discovering, whether it's Three Arrows Capital or Celsius or Voyager or anywhere else. And these are the same lessons that were learned in traditional financial markets many times over. I mean, it basically happens every, certain number of years. People get out over their skis. There's just too much temptation, basically to juice returns. And if you can, as Chuck Prince, former CEO of Citigroup, said, you have to keep dancing while the music's playing. And so if you can capitalize on it while you're in that seat and do it for just long enough to make your fortune, man, things can work out pretty well. It's basically it's basically a pump and dump, right? It's a little bit of a variation on that, but yeah, we're seeing all the leverage that was in the system, and Bitcoin is not immune, unfortunately, because it's the asset that's held as the reserve asset essentially within the crypto system. So here we are. Bitcoin is down because we're seeing a massive deleveraging. And man, the rot was even worse than most of us thought it was.
It was ugly.
Yeah. So Andy, give us the basic definition of what is leverage. How do people get access to it? Are the people who are lenders for leverage, what kind of bets are they making? Are they making bets that the person they're lending the leverage to is going to fail? Can you just give us a quick overview on how that whole gambling system works?
Yeah, I mean, I guess at the institutional level, if you're talking about someone like 3 Arrows Capital, or any of these funds that were taking in assets and then making bets with them. Actually, let's do something like a Celsius. And I don't want to get into specifics, but let's say a lender or an institution like Celsius, right? They take in coins from retail. They say, hey, you'll get paid a yield. We'll pay you a rate of return. And then at the back end, they do creative stuff with it. What do? Well, maybe they go and subscribe to new shares of GBTC when it's at a premium on the expectation that they fund at net asset value at 100 cents, and then maybe they'll get 110 cents when it goes liquid. Well, that was a trade that worked for quite a few months or years, and then it stopped working. Or maybe they go lend money to a market maker, which is basically just it's essentially a proprietary trading operation that clips a little bit of profit here and there, seeing where the market's moving in one crypto asset or another, and they make a profit that way. There's various ways of you can lend coins, right? So there's other market participants that just want to make a directional bet. They want to say, well, I've only got I got $1 million to bet, but I want to make a levered bet, so I'm going to borrow another $1 million, and then I'm going to bet one way, positive or negative on the price of, I don't know, ETH or anything else. And if the bet works out, they make more money than if they were just risking their own capital. And if it doesn't work out, well, then their counterparty, yanks their whatever collateral they posted. But if they don't have enough collateral, or if any of the bets on the book goes wrong, then the counterparty is in trouble. Then they default on somebody else who they owe money to. And you've got all these parties in the system, just like in the financial crisis in 2008 and 2009, where everybody owes other people money. And not only do they owe other people money, but nobody knows for sure what the exposures are. So nobody can trust anyone else. And as soon as trust goes out the window, everyone calls in their short-term loans, and you finally get to see who's swimming naked.
So, Preston, what do you think would be fair to say, or is it at all accurate to say that leverage has a very large part to play on the Bitcoin price?
Oh God, yeah.
Yeah.
And it's not anything that I haven't said or Andy hasn't said for years now. When you're dealing with a credit-based system where there is way more credit in the system than the baseline fiat units in the system, and it's expanding and contracting like an accordion, and I forget what the ratio is between baseline money and the credit that's in the system, but it's an ungodly ratio. And so when it contracts and everybody likes to compare the value, like how much is Bitcoin worth? They like to compare it to fiat units. So if you're comparing it to those fiat units and those fiat units are highly comprised of credit and it's expanding and contracting, well, get ready for a wild ride, especially as you're at such a small market cap like we are today of, slightly under $1 trillion. Or now you're quite a bit under $1 trillion. That's like nothing in the grand scheme of things compared to the size of these other markets, these equity markets and bond markets and whatnot. So people should expect this. This is, that's why I pay so much attention to these central bank balance sheets, and why I'm constantly making posts about it, because if that's tightening, the units are being sucked out of the game. It's really that simple. Now, as you go through each contraction and expansion, expansion and then contraction, you should see the value of Bitcoin going up through that period of time. And in my opinion, you should see Bitcoin outperforming pretty much all equities and bonds throughout each one of those cycles. But you have to look at them if you're choosing a period of time to look at the performance relative to everything else, because that's the name of the game of investing, is what was your performance relative to all the other options that you had on the table. And then how are you defining that time horizon to conduct those measurements? And I would tell you, use a credit cycle. Look at when they're expanding, when they start expanding, when they start contracting, and then when they start doing that again. And that's one iteration, that's one cycle. And how does the thing that you own perform through that period of time? So, if I was going to walk a person through that right now, I would tell you we had a huge impairment during COVID. The price of Bitcoin went down to, I don't know, what did it go down to? 4,000, 3,500 or something?
Yeah.
Right. We're still going through the contraction phase of where we're at right now. So I don't think you can compare where it's at right now. But let's just say we found a bottom tomorrow, right? So the way I would conduct that measurement of the performance is I would say, all right, 2020, March of 2020, we were, I'm going to use round numbers here. We were at 4,000. Today we're at 20,000. You might argue we got the 17.5 or whatever, and that'd be fine. But for simplicity, I'll just say we're at 20,000 was the low. For a 5x return in, call it 2 years, right? 500%. So that's how I think people need to think about the performance of Bitcoin. But here's how I would define how most look at Bitcoin. I bought it at 40,000, like a person that I was chasing after because my friend told me to buy it. So I bought it at 40,000 and now it's 20 and I'm down 50%. And this is a disaster, and they don't know what they're owning. They don't understand why, what it's trying to solve by pegging global money or any of that stuff. Then they're not looking at the fundamentals of the adoption on the L2 and all this other stuff, right? Your typical person, that's how they're looking at this. And so you have to have the right framework. You have to understand what it's even solving. You have to understand the competitors to it. If you're going to a lot of hardcore Bitcoiners would say there's no competition, but they have a rationale and sound logic to define why they might hold that opinion. So just some general thoughts on how people need to think about credit cycles and how they need to look at their performance through those credit cycles, and that they should expect these things until it becomes a global settlement layer. Like, you're going to continue to feel these things.
Yeah, that's really well said. And I want to talk a little bit more about, the bottom, whether we've seen the bottom, whether the bottom is still coming in Bitcoin. And I don't know why this came to mind recently, but I remembered there's an article I had seen on CoinDesk, and without naming names, it was a crypto fund manager who I met, I think it was a few years ago, and he published an article, and the title was "When There's Blood in the Street, parentheses, why it's not quite time to be long crypto." Okay. So the article was, price is down, but we haven't seen bottom yet. And the magnitude he was projecting in the article was something like, we're going to see another 35%, fall in the price of Bitcoin. Okay. Guess when this article was published? It was published in the middle of December 2018, which was literally the bottom, right? Published this article saying we haven't bottomed on the day, basically, that price bottomed. And so, yeah, you don't know when bottom will be in. People are talking about, you need one more panic moment or leverage liquidation or, wick down, or you need price to go down and stay down for some period of time. I have no idea whether we bottomed. Maybe we have, maybe we haven't. It's just a reminder that it's impossible to call these things. Even the pros who get paid to actively trade this asset can't call bottoms and can't call tops. And so you just revert to the usual rules. Dollar cost average, take a long-term view, don't use leverage. it's impossible to call the timing on these things. And so be a humble pleb and stack sats. That's what I do.
Stay humble and stack sats. One of them is far harder than the other. But, like Andy said, Bitcoin will find a way to humble you, especially if you're using leverage, but it'll do it in any case. Okay, while we're talking about how you cannot predict the price or call bottoms or call tops, I'm going to ask you guys to predict the price, within some reason, just because it's fun, right? Now, Andy's completely right. This is a long-term thing, long-term investment, 10+ year horizon. This is the birth of the Internet of Money. It's a protocol stack, just like the HTTP and TCP/IP and all of that back in the 90s. It's going to gain adoption, have network effects, all of this. So that's the thesis, and it's going to take a long time to play out. This is, as Jameson Lopp says, and has one of the best quotes in the entire Bitcoin industry or world or whatever you want to call it. It's, Bitcoin's not a get rich quick scheme. It's a don't get poor slowly scheme. Okay. So with all of that said, I saw a piece pop up, the Tim Draper, the VC who bought 80,000 coins or something during the
auction,
Ross Ulbricht,
from the seizure. Yes.
Thank you. Right. From Silk Road. So he says that we're going to hit 250K within a year from now. I don't understand how that might happen. That's a big number, and there's whole macroeconomic headwinds that we've been talking about this whole episode. Very, very fascinating. Could just be a big name trying to pump his bags. What do you guys think? Is that utter insanity?
All right, I'll jump in. So Draper actually had the 250 projection out years ago. I remember. Right. And I don't remember if it was by the end of 2023 then, but my recollection it was like a 5-year projection to 250K.
End of 2023.
Yeah, there you go. And I think he said that back in like 2017 maybe.
Yeah. Yeah.
So I think he's being consistent with his earlier statement, and it's, still far enough away a year and a half away that it's entirely plausible. So I'm not going to say that it's not going to happen. It's entirely possible. I do think the scenario in which that happens is a reversal of Fed policy, right? I mean, we have to get back into money printer mode. And if that happens, which there's a very good chance that it will happen, then yeah, I think that's totally possible. Definitely not outside the realm of possibility. Just to throw a spanner in the works there, I'll give you an alternative scenario, which I've been playing around with, which is part of me wonders if this decade, right, the 2020s, is this inflationary decade where, yeah, sometimes CPI is 9% and sometimes it's 4%. But on average, it's significantly higher than we've seen in the past. And in that kind of environment, obviously bonds are crap, right? Do very poorly. Equities don't do very well. Real estate, maybe does okay, except for that it's so levered and the valuations are so high that it doesn't really do that well. And so Bitcoin is the star performer asset. And by star performer, I mean like, you make 25% nominal a year, minus 10% inflation or whatever, and you're making 15% real returns annually. And we could, live in a world where that's a fantastic return on a relative basis. I'm not saying we're going to, but I can see both sides. Maybe there's the, sort of the bookends is like the long-term return is not nearly as exciting as we've seen in the recent past, and yet it's far better than most other assets. So, anything in between those two extremes is possible too.
Yeah, and Brady, I'm right there with Andy. Like, I think that the array of potential outcomes here in the future is extremely wide. Mm-hmm. In that, could it go there? Of course, it could go there. Is it going to probably require the central banks coming in with a lot of liquidity? Of course. Do I think that they're going to have to act in the coming 12 months? Yeah, I do think they're going to have to act in the coming 12 months. And I think if they do act, it's probably going to have to be in a pretty meaningful way, because like we were saying earlier, I think they're going to keep trying to tame the inflation until they break something. And so if they break something, they're going to have to come in with a fire hose. And what that looks like, I don't know. I can tell you this, the last 2 times that they've stepped in collectively across the globe, the first time they or not the first time, but from about the 2016 to probably the 2020 timeframe, collectively around the globe, the big four, they added about 5 trillion USD to their balance sheet. In USD terms, they added that to their balance sheet. And then in COVID, it was 10 trillion. So they doubled. So do they keep doubling? I don't know, but that's a really big number. If they even match the 10 trillion that they had on the last round, I think it could send Bitcoin to those kinds of numbers. Here's what you have to think about right now. Who the hell is buying this right now? In my opinion, the people buying this Bitcoin are people that are literally stacking them away in the cold storage and not putting them back on the market for a very long time. That's the type of buyer you got right now. And of course, you always have people trading it around the fringes and things like that and tap dancing in front of the steamroller. But I think you got a very unique buyer in the market right now that's buying these things for keeps. And it's way different than the type of buyer you had when the price was high 60,000s, who were a lot of people that were attracted into the space because they heard their neighbor and they said that they made a bunch of money. Like, that's a completely different type of buyer at these different price points. So when you have that person sucking that supply out of the coins available in the marketplace, when you do get that next liquidity injection, it's like, putting jet fuel on a fire. It's going to explode in the upwards direction. So you have a community here that are they live, breathe, and sleep this stuff.
Yeah.
Those are your buyers right now.
Yeah. Yeah, absolutely. I mean, if you're here right now and you're watching the show and you're listening to Cafe Bitcoin in the mornings and listen to Preston's show and Andy's upcoming show. Everyone's got a show now. But if you're consuming all of this Bitcoin content and you're teaching yourself what's going on and you're surprised about that you never understood what money actually was until you started doing all of this research, we've all been there where you're just utterly obsessed for 6 months or more, like Preston said, eating, drinking, breathing, sleeping, all of this Bitcoin content. I would literally fall asleep listening to the Book of Satoshi on Audible for like a half of a year, just in my ear, listen to a chapter of it while I fell asleep. These are the kinds of people who are around right now during bear markets, and Bitcoin companies are building, heads down at Swan, heads down at River, heads down at, Unchained and Casa and Fold, and all of these Bitcoin only companies that have, established themselves over the past couple of years. It's build time now. And so that's what Bitcoiners are doing, building, learning, stacking, and like Preston said, building that foundation. So that, the foundation for the next run. And this is what happens time after time. You can talk all you want about the timing of the cycles, whatever, but there are cycles. And what happens is you get new Bitcoiners who are excited, brought in by the price, but they actually start to learn and understand what's going on. They stick around, they stack, and then there's another generation that comes in. And the education's better and better. And it's amazing to watch this happen. So if you're here, congratulations. You're part of a revolution, a part of history. Gents, we're going to head over to Spaces here in just a minute. So everybody over in Twitter Spaces, everybody watching on YouTube, you can head over to open up your Twitter app, go up to the top, find the space, or just go to the Swan Bitcoin account at Swan Bitcoin. You'll find the space there as well. And you'll have a chance to raise your hand, come up on stage, ask questions of Andy and Preston. They're very gracious to spend about another hour with us, taking questions and answers. So I'll let you guys go. I'll close things up here and meet you over on Spaces in just a minute.
Salute the sat stackers.
That's right. Let's go, plebs. All right. Thanks, everyone, for joining us on the YouTube stream for this episode of Swan Signal Live. We do this every other week. If you go to it's on this YouTube channel. Take a look at the playlist for Swan Signal Live. Go to swansignalpodcast.com. Scroll back and take a look at the archive of this show. Lots of amazing pairings of the best minds in Bitcoin with great discussions for you to check out and just kind of extend your Bitcoin education in that way. Don't forget about Hard Money. This is our weekly show with Natalie Brunell. High production quality weekly Bitcoin news show, kind of the first of its kind in the industry. We're really proud of it. You can watch it on the Swan YouTube channel at youtube.com/swansignal. A new episode just dropped today. And of course, watch again for next week. There's 4 episodes total now to check out. A really amazing show. Another show that we do at Swan is sort of this morning talk show called Cafe Bitcoin. Every weekday for a couple of hours. It runs from 10 to noon Eastern. So that's 7 to 9 Pacific, with Alex Stanzik as the host. A kind of a regular crew that come up on stage and make some commentary. We always have a special guest. People come up and ask questions and make great points. It's awesome discussion. So check out Cafe Bitcoin, Hard Money, Swan Signal Live. We've got you covered with all kinds of great shows, all kinds of different formats. And I'll see you over in Spaces right now for some question and answer with Preston and Andy.